before we go into the live questions, let's go first to the advanced questions that you guys sent before today. And the first one is about the effect of wartime volatility. So what do the charts tell us about wartime volatility? So in terms of the impact historically. So Juanis?
Yes, well, clearly as war begins in a situation, obviously the volatility will come. I mean, I don't think you can prevent that. And we could see it come in stages rather than just open up once and finish off. So that's something that we're going to have to build in here. I noticed one of the questions is, what is the longevity of war times? It's really very difficult. But normally when people engage into a campaign of war, normally they're there for at least the short term. And what I'm talking about is at least a few months. It's very hard for you to mobilize a major campaign like that and just stop it in a matter of days. Unless, of course, there's a specific target that they wanted. But in this particular case, they seem to be going all the way in Ukraine, and Ukraine is a very big country, and that means it might take some time. And the effect could be, you could see a lot of choppiness into the market, especially when you see flare-ups, right? Because it's something that we're going to have to be able to prepare with. I don't think this will go in the long term. I think it clearly no country would want to go into the long term with this. So I would feel that this could be a bit more short term. But when I say short term, I'm talking about months in duration and not days. So that's something that we're going to have to be able to deal with.
Maybe as a follow-up to that question, my personal question regarding that is, how do we interpret the resilience so far, the last week or so, of the Philippine market specifically? So is it telling us that maybe we're still very ripe for a potential breakout? Is that the correct interpretation, sir?
Well, yes, I think it does keep us in that situation, but I don't think we will break out when there's still a lot of tension brewing, right? It could keep us pinned into the area pattern, but maybe when we see the first sign of a let-up, then that could be something, unless something happens in the Philippines that is so beautiful that people, are very difficult to ignore. And it's only significant events like that can probably attempt to be able to do that. Because if the rest of the world is feeling pain, I think we will probably feel the same pain.
Understood. Yeah. All right, let's go to the next advanced question. On the technical outlook, what potential scenarios should we anticipate? I guess you've partly discussed it a while ago in the several scenarios that you mentioned, but maybe if you could highlight maybe some, like what's the worst case scenario or any positive factors to anticipate?
Yes. I think obviously the worst case scenario is going to come if we see a full-blown war erupt over here. If the war is segregated to Ukraine and it just be hopefully sanctions that try to be able to end this, and we don't see it proliferate around the surrounding areas, that could still play out and not generate a worst case scenario. So the worst case scenario is that we do get a flare up. Let's say some other country gets involved, and then of course NATO gets involved, and that's a very different thing altogether because that could cause a meltdown. But other than that, I think, like I said, I trust that level-headedness over here can come out at the end of the day, and that these things can be mitigated. And hopefully it is contained to where it is. But I really wish that they would simply have a cessation to all this conflict already, so that we can get to where we should be. Because I think without that, we should have already broken out and continue to go higher.
So we maybe just to highlight this specific question. So what do we look for as a reversal sign during this seemingly volatile situation?
Well, if you're talking about the index, I think I lined out the index areas to be marked. So a breakout above 74, 74.50, that should be able to get us back on track to the recovery trend that we have. And as long as the interim corrections can stay over 70.60, or that's where the 200-day moving average is, we can get stuck in a consolidation that still be a potential breakout down the road. So anything below that would change the picture entirely, and that would mean that we probably have to severely cut back on our positions and go tremendously into a lightened situation to avert any major damage into our portfolios.
Understood. Understood. Okay. Now, for the next question, next set. Okay. On portfolio management, how should traders manage their portfolio? Should they lighten their positions, hold, or buy? So I guess, yeah, I think you answered this a while ago, but maybe
Yes.
you could reiterate some highlights.
I do want to highlight that if the question is referring to a trader as against an investor, I mean, there are two positions that you have to be able to take in here. For example, me as a trader, I can be quite nimble. At the first sign of danger, when I see that my moving averages are cracking, MACDs are starting to go in sell mode, I can easily lighten up my positions tremendously. I can go back down to maybe a 30-20% position if I must, and that should be able to curb the risk that I have in a situation. So if you are a trader, I think you're more nimble and you have the ability to do it, and I suggest you to do, because you want to raise some cash for the opportunities that it will bring in. Now, if you're a longer term investor, I would suggest you use the longer term moving average. So that's the 100 and 200 days. So as long as prices are, chopping around, they don't break those two moving averages, you can go ahead and sit on your positions. You don't have to be too up and about and be too finicky about prices, because if you try to move in and out and into a long-term position, that's not going to work out to your advantage, because of course the costs of doing that could be quite detrimental for you. So try to stick it out as long as you can, because you are a long-term investor. But for the traders, please use short-term indications to get you in and out. And by how much? Like I said, if I can, honestly, I can bring my positions down very quickly back to a 30-20% area. If it gets really dangerous, I can go back to zero. But of course, with some potential issues that I told you, we have in a very mixed market, I would like to stick in the stronger issues, because I think there could still be some potentials there despite the consolidation.
Yeah, you got that. Also, follow up to that, maybe as a trader. So my question. So a while ago, you mentioned some of the potential catalysts and risks that you've identified for the market. As a trader, how do you balance it, sir, between anticipating the impact of those potential catalysts versus waiting for the charts to actually confirm either the breakout or the breakdown?
Of course, it's nice to have the catalyst, because sometimes when you see a stock starting to break out and here you are in an environment like, for example, let's say what happened in ICTSI. You have a potential breakout situation, but you're dealing with a war around you. And now the question is, do I take it or don't I? Right? So if the situation seems to be manageable, in other words, we're not thinking all stocks fall down below major moving averages and only one stock like ICTSI going up, then I would probably just not even take that risk. But here there are cases that there are issues that are still climbing, and we're seeing some rotational movements in here. So as long as I still see that there is a demand activity taking place in even a pocket or a good number of issues, then that means that the sentiment has not been tipped to that scale where you cannot make money. And that means that I can still go and gun for it. But yes, in line with your question, I do wait for confirmation. So for example, I would not buy it before it breaks out. Whereas if I were in an aggressive market, I would be buying that way before it breaks out. And that would be the difference. I can be a bit more aggressive when the markets count for it.
Yeah, it's not the exact question here, but it also mentioned the difference between the international markets and the local market. So I guess if I may ask also, for the global traders here in the audience, for you, sir, which one do you think we should prioritize going, at least in the short term, the Philippine markets, or is it the global markets that are more oversold?
Remember, an oversold market still has to make a reversal, right? So in a potential for that, if I already see some reversal signs, or if I see nice consolidation windups taking place in this market, and as against waiting for a potential reversal in another market, then clearly I will start from here. But if I don't see the opportunities in the Philippines and I see potential reversals already in the other markets, and that's the only time that I would sway myself in the other direction. So I guess I could go either way, but it really depends which one is in the more advanced situation that tells me that I'm in a safer position to take. And I can be more aggressive there rather than too aggressive buying stocks on the way down.
Got it, sir. Got it, sir. All right. Next set of questions on stock and portfolio picks. What sectors do you see What sectors do you see would stay resilient with the foreign war dragging on?
Okay. Well, I think the metal resource market will stay strong. But when I say strong, that doesn't mean there's not going to be volatility. Especially issues like your Semirara, your Nickel Asia, your DMC because they own Semirara, mining companies like perhaps Atlas, Felix, and even the smaller ones like Mark and Ore. These issues are climbing because of that advancing into the metal price situation and oil price situation. So as long as we still see some fluidity into the upside there, that could keep activity going for them. Now, with the rest of the other markets, it's not because of the war that I'm buying them. It's because of the reopening play that we're looking at them. Okay, so I don't want to say that the banks and the property were improving because of the war, because that's clearly not happening, right? Like you say, nagkataon lang that you're in this situation where we were looking at the reopening play and this thing developed, and that could be why we're now seeing a hiccup in those two sectors. But I will continue to watch those two sectors as a potential for the reopening play once things cool down.
All right. Next question. If the crisis escalates to a full-blown war in Europe and NATO gets further involved, how much downside risk should we consider?
Oh my God. I really dread to think about that situation because that is not a situation you want to get into. I mean, that will open end everything on the downside because it's very hard to say where things will stop because it can easily suck everybody into the involvement in the situation. Supply chains will get affected, prices will go through the roof, interest rates will probably go through the roof, and you've got a lot of considerations when war breaks out. There are a lot of shortages that could take place, and it affects business in general. People would not want to travel in very, very dangerous zones that could affect airlines, and there could be a shift in some policies to more militaristic situations, and that's not a situation that I'd like to think about. But like I said, if I told you that if 70-60 breaks and you get out of the market, whatever that full war effort, you'll be okay because at least you'll be out of a situation that will be burning with bigger fire.
Yeah, very clear, sir. Very clear. Thank you. I think we have one more. Do we have one more question? Advanced, okay. Yeah. On the mining sector, are we entering a long-term bullish trend for mining stocks? So what's your view, sir, on the mining stocks?
I think medium term, yes. I cannot say long term because I think that's a bit too far because what is aggravating situation clearly is the war. But prior to that, it's really because we did have some supply logistic problems that I think after maybe 6 months to a year of reopening could solve. And that could normalize the supply movements in good time. But the war effort is what's probably creating a little bit more longer, a longer trend in this. But for example, if they end this in 6 months, you will see a very big correction into oil. You'll see a very big correction into copper, into platinum, into nickel, into every industrial metal that you see. And you might not be asking me that question when you see things like that happen.
All right. Thank you, Sir Juanis. I think we still have time. We can go now to our questions in the live Zoom Q&A tab. Yeah. Sir Juanis, given that the PSEi looks strong technically compared to last year's high-flying stocks, do you suggest in the short term that we switch focus of our portfolio to technically strong index issues first while we wait for those high flyers to base out? From Eddie M.
Absolutely. In times of uncertainty, people will try to keep themselves in more defensive stocks and more stable issues. When you see smaller caps or some of these new kids on the block who are telling you, unless their businesses are very integrated and stable on its own and can withstand the pressures of what we've been seeing, or in many cases, some of those new kids on the block were trading above fair value, you could still have some downside pressure into it and take time to reverse. So I agree with your statement. You stay in mainline issues. It doesn't all have to be blue chip, but just make sure that some of these stocks have entrenched themselves with good, decent businesses. And I think you should continue to stay focused on those ones. Yes.
All right. All right. So we continue to prioritize the stronger issues. Yeah. All right. Next one. What is your view on REITs from Claro N?
Well, the pull on REITs is really because of the dividend payout that they give. So I really think there will be continuing flows in REITs, and just pick out the more attractive ones. And I guess those that people feel are more popular names, because I think these are to be the ones that can probably play out very well. But when I say very well, remember, there's also a maximum limit I think some of these things can climb, because if, for example, you're buying a REIT and their dividend payout, given the price that they're at, is only giving you something less than 4 or 3%, I don't see how much more upside you will get. You might be able to get your dividend return, but don't count on tremendous upside capacity anymore in terms of the value of the stock. So wait for it to correct. I mean, that's what you want to do. You're buying the dividends, give yourself a bigger payout after you wait for the corrections. But yes, I think REITs can still be amongst the complementary issues you can invest in.
So if I may maybe take the time to quickly, before we move on to the next question, to quickly promote. No? So in research, we recently launched a new product, the REIT Snapshot. Wherein you could see the at least the most important highlights of each of the REITs, because there's several already, a handful that has listed recently. So what you need to look out for, basically, like Sir Juanis said, the dividend yield obviously is very important. And if I may add also, we also consider in the research team the growth prospects of these REITs, because some of them would have an above average growth potential because of the existing assets of the principal, so they can continue to inject assets to the REITs. Yeah, so something that could help you differentiate between the different REITs. And maybe last point would be, a declining interest rate environment would be good for REITs as well, because it's also viewed as a bond alternative, right? So there. So so maybe we can go to the next question. Is it safe to assume that during these times, it is better to buy at support than at breakout from resistance? From Adrian S.
Yep. Yes, I agree, Adrian. That's the right thing to do, because unfortunately, there are higher chances of breakout failures given this market situation. So yes, you probably want to buy things as they rebound off support. I think that's a wiser tactic to take up right now.
Very nice, very nice. All right, do we have more questions? Okay, given the recent weakness in some of the IPOs, what do you think should I consider before participating in the upcoming IPOs? From John G.
Okay, I mean, as much as I don't want to put in a box all IPOs, understand that, like I said earlier, they normally have to go through certain phases before they move up. But I think if you think that the storyline is okay and the valuations are okay, and you can see that the growth prospects are very much okay as well, I think that should be able to help you pull the trigger for these IPOs. Now, if they list out to be very, very expensive, then that will probably just tip it a bit more, that it probably upon listing will have to make a correction. And if it makes a correction, it's going to go through first hopefully a run up, and then it will simmer down, create a consolidation pattern, and that could take weeks to months long to be able to build. So don't just be jumping into it. almost all of the IPOs that you've seen, even after an advance, they've all come back down, right? And have consolidated. You will have your time to be able to buy them at a better price, or especially after they level off. So don't be chasing them after they blow off after an IPO date. So just be take your time with them. I mean, you don't always have to be in a hurry up situation with them, because 9 out of 10 of them will come back down.
Yeah. I guess people are just, it's human nature to always be looking for the next, the next big thing, right? So, yeah.
Yes.
All right. Next, do we have more questions? All right. Sir Juanis, which stock or stocks do you think is best mirrors the movement of the PSEi? From Francis B.
Okay, so if you talk about, since the index is still consolidating, so issues like I think the issues we will see are some of the property stocks like maybe SM Prime and Ayala Land will build in there, and you can mix that with maybe GT Cap and well, ICTS is a little bit more of an outperformer. But maybe Boitis Equity Ventures, quite a bit of number look like the index. So that's the reason why the formation is quite there. But on the likes of ASEN, on the likes of Monde, on the likes of Converge, they're underperformers. And clearly, just because it's an index stock, you cannot have it, right? You have to be able to know how to tell the difference. So just because it's in an index doesn't automatically mean that it needs to be in a trader's portfolio. And let me just make sure that I stipulate that.
Got it. I think that's very clear, sir. All right, I think we have time for a couple more questions.
Okay.
All right, how to determine issues to trade and stocks for longer term investment? Sir Juanis.
Okay. I think it's very important for you to know where the company is going, right? I mean, I may be a technician, but I always make sure that I look at what the potential for a business is, because it helps me stay sticky to the stock, especially if I'm a trader. The reason is for this: if I don't like the prospects of a company, or know what the prospects are of a company, then I will trade that and forget that stock tomorrow. I'll like buy, sell, and that's it. I won't go back into that stock anymore, because the storyline's not in my head. I don't see what's enamoring about it. So what I want to do is I also want to see what's going on into a business. What's it there for? What are the prospects? How much growth is it taking? What innovations are they doing? I want to be able to see that. So at least, I will constantly moving in that stock whenever there's an opportunity. And when I say longer term investment, it could possibly be that I could keep my, let's say, half of my position in there for a longer period while only trading the other half. It doesn't mean you have to be one or the other. Like, for example, if I really like Jollibee in the longer term, I can keep 50% of my position in there and I trade the 50%. That way, if I'm always in Jollibee, I'm always forced to be able to keep my eye on it, because I like the potential prospects of the business. So aside from that storyline, of course, the technical conditions matter a lot to me. So as long as the price is standing over its 100 and 200-day moving average, I can generate a much more longer holding power in a stock. But the minute they crack those zones, that's it. The trader half of me will be very slippery with issues like that.
All right, well said, well said. Okay, I think we have 3 more questions.
Okay.
Yeah, we go to the next one. May I ask, in times where Juanis stay less invested in the market, how long can he stay more in cash? No gain, subject to inflation losses? Or are there other investing media he looks into parking the money while waiting for opportunities? From Lloyda J.
I don't have to be earning zero. I mean, when I feel that the dry spell is going to take a long time, that's the only time that perhaps I could even go and park my money into, for example, a money market fund or maybe even a bond fund. I know I'm going to make very little over there, but like you said, it's better than zero. And I know I'm not going to beat inflation. So yes, I have to be able to always take into position where I have to look for the equity opportunity. I mean, I have to tell you that is a stronger part of me, and I will look for those opportunities as best as I can. Now, if eventually down the road you cannot find it in the Philippines, then you'll have no choice to be able to look outside if there is no opportunities here. In fact, some of the funds that we actually have right now are actually invested in some global opportunities. So you might also want to check those out, assuming those look more prospective than what you have here in the Philippines. But so far, I have not encountered a situation in the Philippines that does not give me the opportunity to trade. So that's why I've been here and I've been trading in the Philippines so far, despite the war.
All right. All right. Last question at all. This one is the last question that we have. Yeah. Okay. By being nimble, do you mean sell some positions, keep bigger cash position? What about pure gold, MPI? Keep those despite losses, or just ride it out? From GGR.
Okay, so clearly these are the difficult parts of trading. Remember, as a trader, I accept the ability to take losses, right? So I know you don't want to hear that, but if I can cut a loss at a small amount and prevent it from being a big one, I will do so, right? To me, that is temporary, because with the money that I get to be able to save and reinvest later at a more opportunistic time for better profit, I can easily make back those losses. Unlike I stay into a losing stock that's going down and I have no way of knowing what the next low is going to be and how far it will go down. And I don't know whether the business is actually becoming worse or better, especially in times like that, then it should be easy enough for me to be able to let loose of it. Now, again, the thresholds are important. Like I told you earlier, I mean, if you're losing money, but it's still over your 100 or 200-day moving averages, and maybe you can still try to hold on. Now, if you're a longer-term investor and you feel so solid about the name of the company that you've invested in, so much so that you think the growth prospects, et cetera, are still very much in line, then go ahead and hang on to your stock. Because it doesn't seem that technical analysis is what you're using to air judgment in your company. Because if it were, the minute you see MACD cross downs, breaks in moving averages, breaks in trend lines, or if you get topping out patterns, you would have already taken that out. So if you think that the prospects of the company is there, then go ahead and hang on to it. My philosophy is very simple. If I use technical analysis to get me into a trade, it will be technical analysis that will get me out. If I use fundamental analysis to make me buy a stock, it should be fundamental analysis that will get me out, right? That way, I don't flip-flop on which boss I'm going to be looking at, because sometimes that could be very difficult. Imagine if you like the story in a company and you buy it because the storyline is good, but now your 200-day moving averages starts to break and support starts to break. Now you have a conflict. One guy telling you to sell, one guy telling you, why are you crazy? It's getting cheaper. Why will you sell? Right? And so you have to learn how to be able to know who are you going to listen to and when are you going to listen to. And that's why you have to know which boss to listen to first.
All right, all right. I think that's the perfect question to end this event. All right, so Sir Juanis, any last words before we end?
Sure. First of all, Charles, thank you for helping us with this. And for the rest of our COL investors and traders out there, we're upon a time where something unexpected did take place. I know it seems like it's on the other side of the world, but we live in a world that is connected. It's affecting oil prices, which affects everybody. It could escalate or de-escalate on a moment's notice. And so it really requires us to be, as we said earlier, nimble. Nimble so much so that it allows me, if I don't have too much of a heavy position, I can easily just ramp up or ramp down. And that's what it also means to be nimble. And I suggest that everybody get into that situation where they just simply nimble enough to be able to move just in case the market either breaks out topside, or if it starts cracking below 70-60 and things start to go worse, we're ready, we're prepared, and we're not going to get flattened just in case something goes wrong here. But at the same time, I believe there's an opportunity to be made here. That's what crisis does. It produces these opportunities. And I'd rather be a person waiting for these opportunities to take advantage of them, rather to cower in the corner and just close my eyes and say, ayoko na. Because when that opportunity comes and my eyes are closed, it's not going to make any money for me. So keep your eyes open.
All right, all right. Well said. Well said. Thank you again, Sir Juanis. I'm sure everyone here in this room learned a lot today over the past 90 minutes, over 1 hour
Overtime.
and 40 minutes. All right. I also
And
like
thank
to
you, Charles.
thank the research team for helping out with answering the questions through the Zoom Q&A tab. Just to note for everyone here, we'll be including this video in the post-event email that we'll be sending out to you guys. Um, and maybe just to close, just maybe summarize my key takeaways for today's event. No? So from what I've seen, the Philippines remains very resilient despite everything that has been happening. And there are a lot of opportunities, still a lot of opportunities that we have. So currently, the index is still sitting near resistance. No? So hopefully we break that, we break out of that sooner rather than later. No? So our recovery story remains in play as long as we don't break below 7,600. That's the critical support level. So be on the lookout for that one. Okay, but we urge you to be very selective and be very be more nimble, as Sir Juanis mentioned. So always prioritize also the stronger issues, no, particularly those trading above their EMAs, right? And then last but certainly not the least, risk management is definitely more important than ever in light of everything that is happening today. All right. So if I may add my 2 cents to this discussion, so just to share from my personal experience, no, in times like these, wherein there's seemingly a heightened uncertainty, one thing that has helped me personally is a lot of mental preparation. So what do I mean by that? So first, try to educate yourself, learn as much as you can regarding the situation. You read reports, listen to experts. Yeah, just overall be informed. And then anticipate the scenarios that could happen. No? So there's lots of possible scenarios that could happen, both technically and fundamentally. And think of what you will do in each of those scenarios even before they happen. So ultimately have a plan and just execute them after. All right. So thank you again, everyone, for your participation. Let's all hope for a quick resolution to this ongoing conflict. And that's it. Have a great weekend ahead and see you again next time.